If this is the case, then I think markets are vastly overestimating the likelihood of aggressive rate cuts because it could take months. And the market right now is like calling for rate cuts tomorrow. And I think that same mispricing in terms of the actual companies and their inputs and the cost of those inputs is happening in terms of the probability of rate cuts. Maybe I wouldn't call myself a macroeconomist. Maybe there's some way in which they can actually start pumping the markets again while still maintaining the leverage. But this could mean that the pain is going to last much longer than people are expecting. Hello, everyone. We're back. We have yet to upload the previous episode as we're recording this because Ricardo...
Yeah, we sounds like a lot of people involved in pushing this episode live, right? I believe that every other participant on their call has done their job to get the episode out there, except
the team behind us. I'd like to thank them for all the hard work and
dedication. The royal we has yet to upload the episode.
So I blame Ricardo using some kind of like fish-powered sneakernet, which has failed, or the data transfer for the video file. I turned on the syncing and it was like, okay, let's see what happens. Came back 4 hours later and it wasn't done. I was like, what the actual fuck is going on?
You do realize that you mixed your metaphors so violently that you combine fish and sneakers.
Yeah, I thought it was a funny mental image. Is like, you know, it's kind of like pigeon sneakernet, except fish.
Except pigeons actually have feet that you could put sneakers on.
Well, pigeons can actually navigate to a specific spot, while fish, it's like throwing a bottle in the ocean, right? Like the fish will go somewhere, and you hope someone at some point will find the fish, and it has a USB stick on it, and then they'll put it on another fish. You know, like.
Okay,
that's the speed of your data transfer in Spain.
My data transfer is just fine, man. It kind of helps if you let me know so the computer is on.
Dude, like even if your like computer had been bombed into smithereens, it would have been faster than what it was doing now. So anyway.
Not to take the conversation off the rails, but there are some good videos on YouTube about how in the Second World War, people were thinking about using pigeons to help with missile targeting systems back in the day. And that's some interesting experimentation around that. Some pigeons died. None really made it to action, unfortunately. But it was pursued to a degree that's quite impressive, actually.
Okay, so we have a topic for today. We're talking about pigeons.
Pigeon, the Second World War drone equivalent? Question mark.
Also, it says the missile systems were a bit sketch at the time that they really pushed the pigeon hypothesis.
Wait, and weren't Russians at some point trying to train dolphins to swim on their boats with a mine on their heads and kind of like
yes,
right?
Wasn't that the U.S.? I'm pretty sure.
I do have to check this one. I only had one fun animal World War II factoid to share. I didn't have multiple ones.
The United States Navy Marine Mammal Program.
Okay, there we go. So it was the U.S.
So let's not discredit the Russians unnecessarily.
Hey, if anything, I was giving them credit. That doesn't sound like a terrible idea. Even if you're trying to teach a rather smart animal to become suicidal, which doesn't seem like the best plan, but...
Just to keep this balanced, it seems the Russians also did this.
See, there you go.
So it was basically at some point there was consensus that dolphins were a viable marine warfare tactic. Although these Russian articles are from like 2023 and 2022.
Okay, so they're kind of like behind the curve.
They might still be doing it.
Hey man, maybe it was a dolphin. Maybe it was a dolphin that cut off the underwater sea cable.
The U.S. program at least is like a Wikipedia link of a historic thing. The Russian thing is like you Google it and there's just like a lot of news articles that are quite recent. So, maybe this is all fake news. I don't know. I'm not going to dig into it anymore. Also, congratulations, Mika. You did actually derail the conversation entirely. But getting into it, I don't know. I feel like the only topic that we can really discuss is like just state of the world. That includes just about anything. Like I feel like talking about crypto right now kind of misses the target, because I would argue that for the first time in a while, like since Corona, and like in general, like crypto's not the place where people are worried about, pumping and dumping or crashes or things. Like right now, everyone is worried about a catastrophic failure of the whole global economy. So like I think this is kind of a nice moment where, like, I don't know, crypto's pretty chill compared to most of what's going on. But how should we break this down? Maybe like just to kickstart.
We could pretend that this was a proper search and we start talking about warfare, and then we're going to go into economic warfare, which seems to be what your theory is right here.
Oh yeah, I have many theories, and we'll get into them. But maybe one question, and I know that none of us really know what we're talking about, but that's kind of the point, right? We also didn't prepare at all, so like that's why I would make up questions on the fly. But what do you think, like, the best possible near-term outcome looks like?
Woof. You mean like kind of like worldwide, or
the bullish macro thesis? And yeah,
bullish macro thesis would be off the top of my head that either this whole thing was a strong arm kind of show to make other countries more likely to acquiesce to future demands, and then things stabilize, or that people just start discounting anything that happens in the US currently because they're just completely shell-shocked by all the stuff that has been going on simultaneously. And then they stop freaking the fuck out, because a lot of what's going on seems to be general freak out, right? Now, it's not unwarranted freak out, considering how embedded the US dollar is into worldwide economies as a reserve, and the way that it has been plummeting against, even the Japanese yen, who had been getting chewed on by Godzilla for the last 3 years, right? So it's not unwarranted freak out, but at some point, people may start believing that there's an overcorrection, and that either things are going to go back to normal, or that they have to start discounting his behavior. That is, let's say, the sanest thing I can come up with that is not just a completely Hail Mary shot off the top of my head.
So just to repeat that back to you, basically, like something like the US realizes that, like, oh, this was a bad idea. They reverse kind of everything, and possibly the Fed.
Well, two scenarios from the US side. Yeah. Two scenarios from the US side. One is that they do realize that this is a bad idea, and that this is hurting them almost more than anybody else, and doing an excellent job of uniting other countries economically against them. The second one is that they do get whatever, assuming that there's actually a plan behind this, and they wanted to get something with all this shooting their own feet off. They feel that they have gotten whatever it is, and things go back to normal on that side. That would be the US side. The rest of the world side would be that, the first time that someone much bigger than yourself threatens to punch you, you kind of freak out. The second times, maybe you get worried. After the fifth time that they threaten to punch you, or they just start like throwing rocks at your place, you start ignoring them and try to move on with your life and make alternate plans. So for the rest of the world, that would be, like, say, the calm scenario, where they figure out we can't rely on these people anymore. We can't count on them. Let's just make alternate plans and start emotionally discounting whatever happens on that end.
Yeah. Okay. Mika?
I mean, there's a lot of riffs one can have here. So I'm kind of trying to think which one to pick. But I guess, like, if you look at what the end result looks like it's going to be right now, it's like 10% tariffs to everyone else, and then like more heavy pressure on China in the global trade. And that kind of is already, assuming like things head in that direction, is very much maybe a best case scenario that people were hoping out of this. Like, there's some of these arguments are very difficult. Like, how can you manufacture and do business in the US if the volatility in your environment is like this? Like, that doesn't seem like it's a reasonable thing to do. But like, you do find some pretty simple equilibrium if it's like, okay, China is put under a lot more pressure, and then and everyone else is just under like this 10% thing, which isn't that bad. Like, it's doesn't really derail the world supply chains and everything in like a horrific way, probably. So I don't know. That's one take here, and maybe that's like a neutral take, and that leads to things kind of. Then the chart kind of looks like, instead of it going up normally, it plateaued for a moment, it'll plateau for a while, and then it goes up normally again. And it's like kind of, that's what the stock market index can look like, barring like other bigger risk. And there's obviously other stuff that can happen in the world, but like the consequences of the current batch of actions, at least.
Yeah. I mean,
and for as well, before we get into your thing, and I do want to place an asterisk on what you said earlier, that crypto's the least interesting thing to discuss right now. There is something interesting to crypto right now, which is that it continues to hold on better than the S&P, significantly better, which was
better than anyone really would expect, I think.
Yes. I mean, to that, when we were discussing a few days ago, not even a week ago, about the state of the market, that I was saying that the negative outlook on that would be that crypto was just lagging behind and it would catch up massively with the S&P. But it has been when the S&P pumps a little bit, crypto pumps more, and when the S&P crashes, crypto doesn't go down as hard. And I feel there's something interesting there. But anyway, go with what is your bullish scenario.
And BTC is a macro asset to me, in the sense that, like, I don't think it's any more an accident that, like, let's say BTC held very well through the drop initially, and then on Sunday it actually dropped. And that looks like BTC being an asset that people actually trade as a leading indicator. Like, if you're going to trade, hey, on Monday, it's not going to go well. Like, there's one asset in the world you can trade with that opinion, and that asset traded like that on that day. And that is significant to me as well.
Yeah. Well, crypto kind of like front ran the stock market crash. It wasn't like Sunday, Monday, but like by some weeks.
But not that much. I mean, if you look at the BTC chart, or using the SPX as an index, sure, there was a week like 6 weeks ago where it dropped 11%, the ratio, but generally speaking, it did not retrace the gains from even the last months, whereas the SPX has retraced pretty much all the gains of the last 15 months. So it's
but it's like 7%. Like,
sure, but my point is that usually when the SPX, if the SPX crashed 10%, you would expect crypto to be in goblin town, and it is holding up much better than I think it has any right to, other than, if we actually got a decoupling now, a proper decoupling.
Well, if you look at the chart, BTC SPX or BTC QQQ, it's like, it looks very nice. Like, it looks like it's on like a breakout ledge at the all-time high right now. And like with like smaller and smaller drawdowns to like that point, like it kind of looks like that kind of like ascending triangle kind of chart at the moment.
But doesn't BTC historically trade more in line with like big tech than S&P? And I
yeah,
think
you can take the same chart and
it
do
did
it
correlate.
You can do it on the Nasdaq as well if you want, but it looks the same chart.
But it did correlate more with like the big tech stuff, and then big tech kind of rallied and
you can check it out against Apple, for instance, as well. It's on.
But Apple is.
Apple is.
I'm talking about everything else except Apple.
And it trades like far along the risk curve as well. So you tend to see things like Robinhood really pump at the same time crypto does. Like, which is kind of in the same sector, but not really, and kind of along the risk curve in the same area ish.
Yeah, well, I'll give my bullish take. So, like, I don't think this is going to happen at all. But if basically like the vast majority of the tariffs were dropped, and the Fed aggressively cut interest rates, like I think the markets would explode upwards. That's like the possible reversal, but I do not think that will happen at all.
Yeah, that strikes me as very much of a pipe dream ideal bullish scenario, which
that's what these guys want, right? But the U.S. Treasury is 10 years at 4.3 or something. That hasn't gone down during this entire set of actions so far.
Yeah. So there we have like the potentially good stuff, which accurately was called a pipe dream, out of the way. Let's get into the bad stuff. And there are silver linings, but so like I think so maybe to start out, I think the markets are still pretty badly mispricing what's happening. So if you take like the way that I I've been kind of dissecting this is that if you were to find any, like, you just look at all the companies in the US that have inputs from China. And if you did all this work and you just calculated how much more those inputs would cost, I think you would find an insane amount of companies that were profitable before and now are dead. Like, just one day they've got a nice profit margin, the next it's gone and they're dead.
So sorry, before you go on, when you mean mispricing, do you think that it is mispricing it as in it's not panicking enough, or as it's panicking too much?
I
don't think it's panicking enough.
Okay, keep going.
There's no way to look at S&P at 5,400 or something with like a few forward earnings at 20 or 19 or something and think that it's actually pricing in like, oh yeah, the tariffs are 150% from now on and there's no trade with China. Like, that's not a thing. Like, it doesn't think
like this is like Corona levels of like dramatic for the market.
Yeah, you're saying that it's underpricing the impact, basically.
Yeah, this is so well, and here again, like we get to kind of like what does the market kind of know, or like what do they think they know? And I think the market is like the only thing that I can think of that would justify this sort of pricing is that the market thinks there's going to be a very aggressive reversal from the Fed. That would put it kind of in the range. Okay, so like it's going to be like completely fucked. But at the same time, the Fed is going to start aggressively lowering interest rates and basically like start QE. They're going to ignore inflation, and that will have like a similar effect to what we had during Corona, right? Like,
don't you think the market is pricing a trade deal with China? Like that to me seems more likely. Like that's one out from here, but the second out is just that you don't go down this road to its like full conclusion.
Well, the problem with the trade deal with China is that like, there was just a very large explosion.
That's like building not something ominous at all.
Don't worry, I'm next to the military base, so I'm sure Russia wouldn't target my exact location.
Yeah, that's... see, I am next to the military base. I would interpret on a very different path, but okay.
Don't worry. We have a basement, which is a bomb shelter that hasn't been like maintained for 40 years.
Well, the main question is, can dolphins get under it?
I mean, I don't think dolphins want to come this far up north, to be honest. Like, I'm not even sure why humans do. Like, I'm very disappointed in my forefathers who came here and were like, "This is good. Let's stay here. This is fine." Anyway, so I like. I think the trade deal with China thing assumes that like there is something here, like there is something that China can offer which would satiate the US. And I think given the facts of what's currently happening, that's all very unlikely to be true. Like this is what we were talking about in our group. I think the only way to look at this is that it's all about China. This is like there are all kinds of discussions happening in all sorts of countries. The media is like blah blah blah, Mexico, blah blah blah, Canada, blah blah, EU. None of that matters. It's all focused on China. Every single tariff that you point at, like you give anyone essentially in the world, hits China. And then there's also secondary tariffs or whatever they were called that are basically like tariffs on trading partners of China. And so they're just like stacking tariffs and everything is directed at China. I don't think this is like, if you want leverage for a negotiation with China, this is not the way to get it, because this is actually an act of war. This is like trying to nuke them back into the Stone Age. It's a bazooka. Like, it's not. The US is saying like, you either trade with China or you trade with us. Choose. And then obviously the people on the other side of the table are like, but you don't make any of these things. and then there's an actual more difficult discussion to be had. But like, that is essentially what's happening. And so from China's perspective, like, what could they possibly offer that wouldn't completely cripple their economy, that would make a trade deal happen? I don't think there's anything.
Okay, let's
like the point isn't to negotiate with China. The point of this is to prevent China from continuing on its current trajectory, which puts it probably in 50 years past the US as a superpower.
See, that's the thing. This is where we get into the difference of opinions on if is there actual foresight to the current actions. Is there actual foresight or a plan to the current actions beyond, just the immediate next step, which is what I'm guessing. So let me actually ask the question that I asked on the group and that we did not get to. So suppose that this is just a random number generator is spitting out the current behavior of the administration, right? And at some point, just roll with it. At some point, the adults come in the room and they say, let's figure out a way to make this work for us, right? To make the current situation work for us. Given that neither of us has any information about if this is a plan or if this is just a random number generator.
But I think I think we can all like realistically say we have enough information to not 100% discount it as RNG. Like that seems like
sure. But my question is, I do agree that that this is to hurt China as much as possible. Explanation makes sense. What my question is there any other explanation we can think of that would make as much sense as trying to hurt China?
Well, half the people in the world think that this was essentially Trump just backing down, obviously they didn't back down from China, so there is that says there's a special focus towards that, but that essentially that this was like a first step in capitulating to the bond markets and to the markets overall, and that okay, Trump really liked tariffs, but he couldn't do them to a certain degree, so he'll just do them to like a lesser degree, and that's the kind of end goal here. That's like one argument.
But sure, but like why the tariffs in general?
Why the tariffs overall?
Yeah, like there needs to any alternative explanation needs to explain why tariffs and why they're all stacked towards China, right? Like,
yes, that's true.
If the point of this
why
all
they're
is
stacked
not
towards
to
China,
fuck China.
like that explanation doesn't still cover that. Like it only covers like kind of like, because why tariffs can be a kind of a simple answer, which is like, well, Trump's just thinks that trade deficits are a bad thing, and that what he's doing with the tariffs like fixes that problem. It doesn't actually answer the question of now they're fully stacked against China. So like the argument, it looks now much more like China than it did previously. Like previously, it didn't.
Or you know,
so
making if
like
you take
the Vietnam, like it doesn't look like you're making a big play against China at that point, but now it looks a lot more like that. So I'm actually arguing for Devil's point.
That's the thing with tariffs. You could come up with lots of explanations, like you're putting out tariffs, as Mika said, just because he thinks they work in his favor, which would be stupid, but maybe he thinks that. He's putting out tariffs because he wants to make the.
Why would he, by definition, be stupid that they work in his favor?
Wait. Let me because historically they haven't worked in the U.S. favor. Well, on the last two times that U.S. presidents have put out massive tariffs on other countries, the U.S. economy has tanked. So if you go with a historical precedent, massive tariffs in this way have not benefited them in the past.
But if you look at the last week, right? Like every country has come to the negotiating table because of the tariffs.
Using the tariffs as a threat, if you have a goal, might work in your favor. Keeping the tariffs, no. But which is again why I'm getting to the next thing. Like for instance, you could use the tariffs doesn't need to be China. It could be just to make the European Union feel economically subservient to the US because he feels they're getting uppity, and this also benefits Russia, which he seems to be kind of like tight with, right? So that could be another possible explanation.
But they've generally, like the EU-US relations throughout this have been like better than most other dynamics.
You mean towards the tariff, through the tariff thing? Or what do you mean by through this?
I'm saying like they were immediately talk started about a zero tariff zone between EU and the US.
They also started communicating with China, Mexico, and Canada. Like Germany wanted to come to the table with China as well. So there is, first of all, what you're saying is that the US, that the European Union started jumping to the US's tune, then you're just agreeing with what I said, which is what it was about making the EU feel subservient.
I don't think the EU did jump to the US's tune. I think the EU basically announced countermeasures, and then somebody somewhere was like, wait a minute. Like, like the EU is the largest basically like economic zone in the world. I don't know what it is right now, but pure like GDP wise, or
GDP wise, it might be. Sure,
it might be a little bit smaller than the US. I'm just gonna check so I don't talk out of my ass. It's about the same. So it's about equivalent to.
The thing that doesn't really make sense with China for me, generally speaking, is the fact that if you wanted to, the only way to nuke China into an economic stone age, as you put it, it would be to completely isolate it. And there are a lot of things
that they're trying to do.
Yeah, but the thing is that there are things that only China makes right now.
I know.
So
this is what I was getting at, is like when you get to the negotiating table and people are like, sure, like we'll only trade with the US, and then they're like, well, can you give us something that only China makes? And then the other party's like, well.
I mean, Apple is already looking to source more phones from India, from what I recall.
Yeah, but it's I think like we need to be careful about like thinking in absolutes. So I don't think the outcome of this, I don't think people are expecting the outcome of this to mean that like zero anything comes from China, right? But if you can like take away everything you can take away from China, I think that puts China economically back in the Stone Age. if on top of that you have 400% tariffs on everything that comes out of there. So like there's a middle ground or a shift in balance, and like it seems to me like what they're trying to do is to make the most dramatic shift in this dynamic that has like ever been done.
This is one of those
and
areas.
In terms of like plans further, so I don't think you necessarily need to think about like there doesn't necessarily need to be a long-term plan of how to play this. I think this is this is like all their ammo. Like I think this is just like go big. Like if this fails to some degree to contain China, then I think the world order will shift massively. Because so it's kind of like two outcomes. One is that China needs to bend the knee in order to survive as a nation, essentially, right? Like that is like if a 400% tariff on just about everything coming out of your country, like you can't live through that. So that's one option. Whether they do that is very dependent on what trading partners they can secure outside, like basically like who can they pull away from the US. And so what is like that's what decides, like, can China create a independent trading coalition, whatever group of countries that's big enough to kind of sustain, even in a case where the US and basically the whole rest of the world is going to be blocking you out in every possible way that they can. Yeah. And that's the question. And that I think also is like a reason why it's so sudden and why it's so aggressive, because it doesn't give anyone the opportunity to like the other parties can't really, they don't have time to figure this shit out, right?
If you move at the traditional
whatever you
diplomatic
think
speed,
about Trump and Trump's negotiation stuff, like I don't think Trump has anything to do with this. I think Trump is a mouthpiece for the people that are doing it. Like this strategy actually, it is kind of genius. Like I've been saying for a while that like the US hasn't been using the leverage it has. This is the extreme other end. This is them using all their leverage all at once, which puts like everyone into a very problematic situation. Because if you imagine yourself as like any country in the world, it can be east, west, it doesn't matter, like wherever. And within a week, you need to decide, are you going to like go with the US or are you going to go with China? I think it looks bad for China.
So before we get into the thing, which is something that I do wish we had discussed a little bit on what does China mostly export that nobody else does thing. But so it sounds like your hypothesis here is that there's some shadow Dick Cheney mastermind behind Trump that's actually coming up with something that's a working plan, and we're just filtering it through Trump's usual drug-addled randomness. Is that a hypothesis?
I mean, that's sort of like do we like, I think so. First of all, I think obviously Trump must be a mouthpiece. He is obviously not personally involved in everything the US government does. These are like 100% factual statements. And thus there must be other people, like, so it cannot just be Trump, right? Like Trump being dumb or not doesn't really.
I agree with that, but for instance, during the Bush administration,
but if the question is, I think if the question is like so, I think the Trump is a maniac thing, like if you say like the statement Trump is a maniac, I think is true. Like this I think is unequivocally true. At the same time, that like the narrative that is quite prevalent is that like, so everything the US government does must be idiotic and have no sense or purpose because Trump is a maniac. I think that is not an accurate statement.
Yeah, I don't think that's
like I'm not willing to discount
you
every
find
action.
You find plenty of people in his administration who you can point to as the kind of people, like including Vance, as like prominent figures who have spoken out against China and for a long time. as well. One interesting aspect of this like trading leverage negotiation, the obvious question is, does this push China to blockade Taiwan, which like just on Polymarket has gone from like 7% to 21% by the end of the year here.
Well,
and
this is the question.
That's like US can't take that either. Like that's not within the scope of things you can actually handle anymore.
So there's an interesting conversation to be had there, which we can come back to in a sec, of like why would that be a reasonable response? Because I don't think it's not clear. But like anyway, Ricardo.
So I definitely agree with the Trump is a maniac thing. My thesis here is not therefore because Trump is a maniac, nothing that comes out of the U.S. government makes sense. There is definitely a pattern to some of these things, particularly the part where they're making people's lives miserable. But my question is, which is why I use the Dick Cheney example with Bush, with a situation like the U.S. president, the question is always, how much of what is being executed is because this guy had a brain fart and then everybody else had to come up with a way to make it happen? And how much does this person listen to other people's input and guidance as well? And with Bush, that always seemed to be more like everybody else is pushing stuff up to him, and things then just happen to be coming out of the White House in general. With Trump, that's the part I'm not entirely sure. How much does this character actually listens to other people, and how much he just fires anybody who doesn't want to execute on his random ideas? Well, so that is basically the dial that I'm not sure where to place.
Here again, there's an assumption built in that these are Trump's ideas that somehow, like, and I think that already in and of itself is like completely impossible.
It's an assumption. That's my question, basically. Like, how much of what is being executed are ideas from these guys that somebody else executes, and how much is being floated up?
It's the same kind of. It's like how many of the things that Apple does are Tim Cook's ideas? Fucking zero. Same thing here.
Yeah, not quite impossible. The same thing.
It is impossible for him.
No, like, for instance, you could argue like let's start mass deportations, right? This is something that's easy enough to come up from a single person, and then you do require a whole contingent of people to execute on them, right? So it's not impossible.
Even mass deportations they're not originally Trump. Like, so the point is, anyone with like that large of like an organization under them, they're not coming up with ideas anymore. Like they just aren't. They're being pitched things. They may decide which ones they go with or whatever like that, for some critical ones. But like, this isn't really a very major point because the outcome is kind of the same. But like, I'm just saying, like, the view of Trump as this sort of like independent agent operating in isolation, I think is just blatantly false and is like,
I don't think we're arguing about that, but sure.
And in the tariff case, it also seems to be quite clear. There's like people in his cabinet, like New York Times reported that it was like discussions with Besant, which changed his mind about like tariffs as revenue to tariffs as trade negotiation rules.
There are like many people in the government who think this is actually a good idea, and they're not all idiots. Like, I'm willing to take like a high percentage. Like, if we're like, how many people in the U.S. government are idiots? Like, I will take fucking 70%. Like whatever, 80%. But they're not all idiots. And so like that yeah. So so there's a sort of separate discussion, which is like, why does everything look the way it does, right? Like that, and that I think is confusing. Like, is like, why does everything look so like shoddy and like chaotic, and part of it is probably that it really is extremely chaotic. Like, I think executing on like regardless of if you have a plan, like a good plan or not, executing on what they're doing in practice, which is basically like a global like restructuring of their foreign policy, like that is going to be chaotic. Mostly countries don't do that because it's too much stuff to do in one go.
So quickly get back on the China question, I just loaded up the list of top exports from China. Just the top 3 are computers, broadcasting equipment, and telephones. In 2022, that added to about $400 billion, a little bit above that, according to the Observatory of Economic Complexity.
If I understand correctly, and again, I'm not a China analyst, but my understanding is that most of the inputs to those don't come from China. So it's mainly the I don't know what is the term, putting the pieces together.
The factories there is what you're saying.
Right. And the actual supply chain is sourced from like all around the world. It's like all around Asia and general in many places. And so like and there's some like rare earth stuff that's like predominantly from China. There's like specific categories where like it's hard to see that it could even change in 20 years time. But I do think for a lot of categories you could. Like this does seem like something that there are many Asian countries which already like they've kind of been poised to take over some of that because the labor has already become cheaper. There's already been some movement from large corporations to like away from China simply because China's quality of life has gone up so much that the wages have gone up. And like we can obviously debate the merits of globalization and capitalism, but like the markets, blah blah blah. So like kind of like coming back to it, like I think the one thing that I think might be very, very China oriented right now, which Mark Andreessen talks about a lot, and I don't know, I kind of believe that he might know something about this, is that apparently like the entire robotics supply chain is basically there. Again, inputs may come from elsewhere, but drones and robotics are like very heavily in China. And that's something that like would need to be built up elsewhere that doesn't really exist anywhere else.
So Mika, you were talking about the odds of China blockading Taiwan and going up to what, 21% on Polymarket?
Let's go into
World
War III question mark.
Yeah.
I always ask this like every 3 episodes. Are you long or short at 21? Like, are you a long or short of Polymarket market that is relevant to our discussion? Like 21, would you go long or short on that?
21% chance?
Yeah.
I mean, just odds-wise, the same bet to take would be the 21% because it has the higher payout. But that would be a gun to my head bet.
Well, presumably the market, if you assume the market is efficient, like the payout is the same mathematically. So I'm just saying, where would you make a trade on that one?
Gun to my head, assuming that this is to nuke China into an economic stone age hypothesis is correct, then I would be long that one. But I would still need to convince myself that there's no other sensible explanation other than isolating China economically. Because if you do aim to isolate China economically, I mean, they have already responded by banning American films, which is going to hurt some of the industry, but blockading Taiwan basically stops anyone from getting access to a whole host of chips.
And Trump is talking, like, I think the variation here that people are thinking about is Trump is talking about a trade deal with China. So then it's just, is it one of those things where he's actually like going to go like the full hardcore version of this? Or is it like, oh, there is a deal to be made and it's like, it's not that different from how the world used to work, and Trump claims it as like the biggest victory of his life when life kind of goes on, versus like actually escalating this. Like, I think that's what the market is ultimately about.
I think there's a deal to be made, but I think it like if you sort of correlate what the ask would be with the tariffs, then I think the ask of China will be extremely severe. Like, so, and here again, we come to like, I think these actions, if successful, do greatly benefit the US. Like, it's kind of like it reestablishes the US as the world leader for God knows how long. Like, because it substantially moves like ability to grow economy from China to elsewhere where it's sort of like less dangerous to the US, regardless of how it plays out. And so that rewrites the script for quite a long time.
Yeah, I agree with that.
In terms of Taiwan, so this was kind of what I was getting to, is like my intuition is that there's a much higher likelihood that they try to invade Taiwan. But what I like, when I think about it a little bit more, I'm like, what does China gain in this circumstance by invading Taiwan? And I'm not sure about that. Like, okay, I'll get a few hypotheticals that are thrown out often. One is like, okay, you kind of like, war is often used as a way to essentially like deal with your population in times of great stress. Maybe, but like war with the West, potentially a coalition of almost the entire world, you know, like that might not relieve stress. It might be too large of a common enemy where it seems unwinnable from the get-go. It will maybe not be popular. The other is that, like, okay, you get access to some of that manufacturing, but I think like in terms of a strategic benefit is like what does that allow China to do that would save them from the economic consequences of this in the next 10 years? And I don't think that's clear. Like, I don't think Taiwan gives them that much leverage that they would, like, you know, be able to dig themselves out of this situation, even if they had Taiwan.
And that is assuming that you actually gain control of the factories and not at the moment that, you know, it is clear that you're invading, the Taiwanese people commit economic seppuku and destroy anything that's fundamental for operation, right? Which is, again, why it gone to my head, I would be more likely to take the blockading bet, because if you blockade, you still have a bargaining tool, whereas if you invade, now you've basically committed to a fight. So
the poly market is actually include both of these. It would blockade would fill the requirements.
Okay.
Yeah, I think it's the same, essentially.
I don't see them as the same thing. I do see a blockade as much closer to picking a massive fight, which could get ugly really quickly. Whereas I think that invading would at this point be seppuku. So.
Although this does have the implicit assumption as well on the rest of the world and Europe playing a ball with the US.
We don't have a choice.
Yeah, to a reason.
Like, who's going to like,
yeah,
look, 30, 40 years from now, if this happened, like, and you know, this didn't happen now, maybe they would actually be like, we might go with China. Now, it's not like it's nowhere near equivalent in terms of a market to sell things into. It's just not. And so, yeah, I don't think countries have a choice. I think other countries that don't go along with the US go back to an economic stone age if they do that, right? Like, what are you going to get from China that will, you know, China doesn't really have bargaining chips with these other countries. Not big ones anyway. But if we go into like the macroeconomic side of things, so the one thing that I think here is like a big deal in a way is like, let's take this kind of general hypothesis as true. If this is the case, it may actually be that the US does not want the stock market to improve. One reason is that once the Fed moves or pivots or starts aggressive, like kind of QE type actions, other countries will be able to do that as well. And that is not good. And furthermore, the more that you keep these, so you're trying to basically like get every country to partner with the US against China on this, in this scenario, the more that their stock markets take a hit, the more leverage you have to get them to the table. And so you actually want to continue the pain for as long as you need to, including China, by the way. So you want everyone to suffer until you have a deal with China. Like you have a situation where it should be like whenever there's a deal, bang, the stock market pops a little bit, but the US is still not pushing too hard because that would basically inflate more of the rest of the world as well. And so you want to keep it low. And if this is the case, then I think markets are vastly overestimating the likelihood of aggressive rate cuts because it could take months. And the market right now is like calling for rate cuts tomorrow. And I think that same mispricing in terms of the actual companies and their inputs and the cost of those inputs is happening in terms of the probability of rate cuts. Maybe I wouldn't call myself a macroeconomist. Maybe there's some way in which they can actually like start pumping the markets again while still maintaining the leverage. But this could mean that like the pain is going to last much longer than kind of people are expecting. Just because the process is going to take time. Like you just don't negotiate this with everybody in, a matter of days. And I mean, they're trying to do it as quickly as possible because I think quite literally they're being like, look, you have a week to decide sort of thing, so that no one can even really consider China. No one can even visit China to like be like, hey, what would you guys offer us? But if that's the case, then I think this might get very, very painful. Like, again, sort of like Corona levels painful, which is rough, but also creates potentially an investing opportunity that's been quite rare for our generation.
By that you mean blood ends up on the streets.
Yes. As a capitalist living in a socialist country, I like buying stocks when everyone is bleeding. I mean, and
good question, like what the appropriate amount of bleeding is and how much they can also take themselves, because the S&P's drawdown wasn't that far off. It was like about 90% of the post-COVID inflation bubble drop, and that puts it about 45% of the way to 2000 or the Great Financial Crisis. In the Great Financial Crisis case, a bit less than 40%. So that is like a hit in the regular markets already. Like the market was, of course, the market is also coming down from very, very high valuations overall historically. So it's that's worth considering. So maybe 20% is kind of like it's not that bad. But like if the stock market is down another 20, that's a lot. Like like that's a lot of pain already.
Yeah. Well, this is why I kind of like draw the comparison to Corona, because like many people many people did understand this, but a lot of people around me, like regular normal people who don't spend their days thinking about this kind of shit and wear tinfoil hats, were like, what's the problem? And I was like, the problem is that like if 50% of the world economy disappears overnight, like we have Mad Max instantly. And so I think it's sort of severity wise, it's similar. It's possible that like this gets iron. Like I think the idea probably is that this gets ironed out kind of quickly enough. That's why it's so aggressive. It's like the markets almost don't have time to even do the math. You know, like I'm sure every single portfolio manager is going through their portfolio right now and going like, what, you know, what's, but like figuring out what every single company, what their actual sort of like economic impact is, especially since it's like changing every day, is impossible. And maybe that's intentional to sort of like, so like markets just don't have time to price it properly. And they're hoping that they get it sort of sorted out before then. But again, I think it's months, and I think the very real implications of this will start to be seen like all across the board. And I think it's brutal. Like I fucking everything from your Nikes to your phones to your TVs to like probably all kinds of construction materials to like various types of grocery, like it's fucking everything. And not every like it totally depends on where that stuff is coming from, what that country's relationship is with China, et cetera, but like everyone has a relationship with China basically. And so I think it's potentially very, very bad. And that drop, like once the reality sets in, I think the reason I think it's such an interesting investment opportunity is because markets will probably overreact quite considerably to this, which means that we may get prices like if you imagine there's some like real perfect price, we might essentially for the first time in our sort of lives have a moment when the market price is under the real price as opposed to over. Because right now, like if you look at the PE ratios of these companies, like they're like they have nothing to do with reality anymore. Like if I was like, I'm gonna sell you, Ricardo, my company, and my company's profit margin is and growth trajectory is such that you'll make your money back, I don't know, 80 years. Like I won't even fucking be alive. Like I don't I don't care about 80 like that. It's irrational. It makes no sense. And there's all kinds of reasons why that is the case. But if we drop to like actually realistic PE ratios, like that's a harsh drop.
Yeah, if we get like 30% down from here, that would put us at the bottom range of stuff where it used to trade, like in the 50s, it used to trade at that level. There's a kind of a moment there in the great financial crisis where it trades at that level, and then it kind of comes up from there. And the last 10 years history is, we're kind of at the last 10 years like level. So like for the modern era, we're not like that overpriced anymore. But for kind of like the 100-year era, we're overpriced by, like you could argue a little bit, but overpriced by 15%, or then like at the bottom of the range, 30%.
Yeah, I think PE ratio is potentially like an interesting thing to chart. The one thing to like note though, which is why this is so hard to trade, is because this will impact so many things, but it won't impact everything. Like, and it's kind of like random, you know, like it's just did they happen to acquire something from, you know, or not?
Yeah.
And so then like trading the S&P 500, like even like let's say that we have another 10% drop, dramatic drop, but that might be that there's like 50% of the companies are dropping some insane amount and the rest are fine.
Yeah, exactly.
And
but
so
it
that's kind of
does create one more bull case, which we've kind of mentioned a few times, but it is that the markets just haven't been able to take any pain for a long time. The level of interventionism in the capital markets
since 2008
has been just at a breathtaking level. There's like no crisis to which the response hasn't been like immediate and swift so far. So that creates its own kind of weirdness.
Well, that's why I think that's why the markets are not reacting more, is because they assume that like no amount of pain will be tolerated. And that may be true. And if that happens, we'll probably have an insane reversal. Like we're going to go all-time highs and everything. Inflation will skyrocket, but fuck the price of tomatoes and the people that need to buy them kind of attitude. It's possible that might happen. And I always think of inflation. So like my economist friends are always like, inflation targets and whatever. I think is a much more pragmatic view, which is basically like you view your inflation through the lens of how likely a revolution is. And I think that's about right. Like the higher the inflation, the more unrest there is. And I mean, in democratic societies, like it's just much less likely that you're going to get elected again and so on. And I think on that point, I think inflation could be higher and people would generally be okay. Like, having a 3.5-4% inflation for like quite a while, like I don't think would dramatically change voting outcomes, even though it would hurt a lot of people in like lower income brackets.
Maybe, but also like inflation is like the number one thing that gets you kicked out of office. Like, and it does get you kicked out very quickly. It does get
high inflation combined with like low employment would be the big bang.
It's also like hard to cut. Like the 10-year is the 30-year went to like 5% yesterday. Geez, I can't remember who it was from the Fed yesterday who gave a comment that like this is some like hard trade-offs, and for them it's like super hard trade-offs, especially if the pressure is there, which Trump puts the pressure like every day. Like that guy loves rate cuts more than anything in this world, right? And so the political pressure to cut rates is like massive, and like there's all like macro so complicated because like girl slows down. Like right now you can be like even deflating quite aggressively for a moment here or whatever. Like it's all this stuff that goes into it, and how quickly do you react to that, and you overshoot, undershoot, like it's such a complicated piece to get right. Jay Powell actually has done like probably a good job in hindsight, like managing through a lot of stuff.
They're always hated in the moment, but then you're like, would you want to be the guy?
If they're loved in the moment, like that's actually a counter signal, right? Like if they're actually like if they just gave Trump everything he ever wanted in this life, like I'm not sure that's the way to run a country either. So if they're like super loved by the people, like you're probably getting into like a very populistic thing, which is good for 3 years for like some nominal like looking asset prices, and then like you just take a massive hit after that.
Yeah. Well,
so a bit of a note. Bit of a note for anyone who thinks that the Corona comparisons are fatalistic or the 30% numbers. I was just checking to make sure. Actually, the S&P dropped about 34% during the first weeks of Corona panic, and a 35% drop from here would put us kind of at the level that the market was just as it was digging itself out of Corona. So yeah, that would be a pretty freaking horrifying scenario if you consider that this is the S&P, right? And
that's great financial crisis bottom. Like that's the worst bottom you've seen since the 30s, like late 20s. Yeah. Like that's it's also
S&P
like
500 moving like 1% is newsworthy.
Yeah. In crypto, like it's funny because at crypto investors, you're like, 20 on the S&P, not so bad. Like 20 on the S&P is doing stuff, like.
Well, this 40 is on the
S&P is like really doing stuff.
Well, I was like doing the math. This is where the crypto stuff comes in, and I was like doing the math of like, okay, if I really believe this, I should go like leverage short the S&P 500. And then I did the math and I was like, wait a minute, like in most situations, I'm getting 30% on this trade. Like who the fuck gives a shit about 30%? Like
this is crypto,
guys. Like I need 20x.
And you're worried about the incentive on the other side because you're also betting into like rigged markets, like their incentive to rig it just gets like so high, like it's
and they might actually do short squeezes. Like it is fascinating that when the S&P dropped, Trump tweeted or whatever, posted somewhere, now is a good time to buy, and then the markets rallied, and it's a bit tinfoil hat, but that feels like a short squeeze because there was no reason to rally. Zero.
And if you take, the good old saying about Trump about seriously, not literally kind of thing. If he talks about the market again, I'm going to take him literally. Like he tells me to go short, I'll go short. He tells me to go long, I'll go long.
But I mean, this is what Elon did at Tesla at some point. Is he posted that like buyout offer, whatever, 420. Markets rallied, and the whole point of it was to squeeze the shorts. Like, I mean, I'm not defending this behavior at all. I think it is like pretty sketchy.
Astoundingly corrupt is what I would say.
Shorting in this world is so difficult. In any asset, it's like because the upside is so capped, and then the incentive from the other side is so like clear to go after your liquidations. It's like kind of seeing the on-chain liquidations in a bad time, and you just know it hits them. Like no one ever is safe when it's like that.
I mean, generally speaking, like I think that the only reason why people keep looking for shorts is basically the fucking movie. Because if you do the math, there is, I mean, best case scenario, what? It goes to zero and you double your money if you were in leverage. And if you're actually leveraged, the market kind of like looks up a little bit and you're white. So I just really don't get people who keep looking for shorts.
If you make 73% on a short, they'll make a movie about you, and like Christian Bale will play you. If you make 73% just like sitting, like no one
gives a shit.
Like anything of it. Like Christian Bale ain't coming to play damn well if he like plus 23% on the S&P this year. Like,
yeah, well, I mean, if that was the case with longs, then every like early Solana and ETH and Bitcoin investor needs their own movie. Like, where's the movies, guys?
The fucking S&P has done 50% in the last year and a half. That's the S&P, so never mind crypto.
Yeah, and shorts have well, depending on what instrument you use, you like kind of increase your counterparty risk. There's like all sorts of stuff. Like
you have to pay for the privilege as well often, and like in a market where it's EV positive to bet the other way with the eyes closed, like it's stocks go up because earnings compound, right? Like it's very difficult to short this stuff.
Yeah. And I mean, and this is why, like, I ultimately came to the conclusion that I think the way to trade this is the basic dumb way is buy low, sell high. Like, if it happens that this actually gets much, much worse, I think like much, much worse is like more than 10% down S&P 500 from here. Like it reversed a little bit already. So like it, even going 10% down would only be sort of like, I don't know, 8-9% kind of in practice. So kind of more than that, like, then I would start looking at like what companies are trading for and think about buying. And I mean, obviously not financial advice, but like I'm always in moments like this is like you just know things are going to be mispriced. And that gives you kind of like I don't buy dips. I don't do anything like that. It's more like if the market is often wrong for a while, so you don't need to be like aggressive about it. You kind of like try to find somewhere where it stabilizes. And if it's out of whack, like ultimately companies will continue performing, right? Like companies are not going away. The world order can change. Some companies will be a little bit screwed. So like some companies will go bankrupt. A bunch of companies will get back to business as usual pretty quickly. and they might just be mispriced because of everyone else being mispriced. Like it's, investors are kind of lemmings. Same thing in crypto. Like, the market, it's not like when there's a crash, there's not like looking at like whatever, how much protocol revenue you're making. It's just everything goes down. And this is even further driven, and we don't need to get too much into this, but like I think there's a general structural problem, which is a relatively recent phenomenon of a massive amount of the market being index ETFs, which like means everything in those portfolios, they don't trade on fundamentals at all. Like it's just, you get into the index ETF portfolio, bang, price goes up.
Yeah.
Nothing to do with fundamentals. And they keep getting bigger. There's more and more money coming in. They just get allocated based on some weighting structure, which like there's no good one. Like often it's market cap weighted, and market cap weighted like means literally that the big companies get bigger in perpetuity. Doesn't matter what their business looks like. So like all that is to say, like a dramatic mispricing can have these like secondary effects that cause even more dramatic mispricings because they get shifted out of certain indices or fund portfolios that they've previously been in, which is like an instant dump, right? Like, so if a fund, let's say you have a really big fund and you have 100 stocks, you have some method by which you add stocks into that portfolio, and then you take stocks out of that portfolio, like, if it's market cap weighted. So then you have like a situation where at some point, if the market cap is low enough for long enough, you remove it, and you remove it essentially by selling your position. And if that happens across a large number of entities across the world, you suddenly have like a bang, even though the company is still business wise doing the same thing.
Yeah. It's interesting. Like, do you get an opportunity here to buy into some really kind of forced selling? And there's like structural arguments why you kind of don't. One is that we're lower already by a significant margin from the top, and the other is like the people just passively index into these. So like the buying appetite is kind of structurally always there. But then I'll say, I wanted to make this point, but I didn't know where to put it, which is that in TradFi, in crypto, you always talk about like systemic risk of leverage and things like that. And in TradFi, they're actually kind of worse at this than we are. Because like there's always these
so
like quote unquote delta neutral trades that just like need a 5% move in something until it blows up, like the yen carry trade or something. And it's like, and these guys get immediately unwound to the tune of like 100 billion. Like,
wasn't the yen carry trade estimated to account for like over $1 trillion?
The amounts are massive, and like if
these guys are cowboys, like much more than meme coin traders.
Yeah. And they live on, because they live on these such long cycles that like the kind of analysts coming in have never seen a dip. So like the yen can never go up or something is like very
and then they have to trade like that because the cycles are so long.
Exactly.
Like it's sort of like the whole thing of like, if you think the economy is bullshit, then don't buy stocks. But if this economy continues to be bullshit for 20 years, like, like you're now poor and everyone else is rich who is ignoring the economy.
Yeah. So it's like, I wonder, that's why the interventionism is so horrible in some sense, because it just distorts the market signal always, and crypto is like a pure expression of what happens, and there is something about like learning through very, very harsh and fast like signals of, I'm not saying the crypto market isn't manipulated, that's not the point, but it's like manipulated in like a free market way, in a much more kind of like like these actors there is a huge difference between these two. There's like the state doing it versus like everyone in the market conspiring and kind of their incentives going to do different stuff, and that to me like actually creates a much more interesting market. And like I hope like in the future, like when the stuff all is kind of on chain, I just want to see like the analytics, and like it's so hard to even get data on this stuff, right? Like the normal world is so so weird and so opaque and so like distance, you know, like all this should kind of run in a much more like interesting, transparent fashion where you can like see all the, you know, you can see every liquidation point, you can see every trade.
Yeah.
Like,
I mean, in TradFi, like there's all these blow ups of hedge funds that have basically like split their exposure across many banks. So like nobody really knows what their exposure is until it blows up. And then you're like, whoa, like these guys we're down a bill with leverage and banks kept lending to them. Like, yeah, but I think I was just going to actually ask this kind of same thing is like, it'll be super interesting to see how leveraged the traditional economy is. And this is like, goes back to my, like, markets haven't reacted enough. I don't think this is an unwind of leverage yet. Like, I think that it would be much worse. And it's a bit unclear, like, where would it happen? It's probably already happening. How much opportunity is there? Because the traditional markets have also created all these mechanisms to like unwind leverage without causing market panic. Like, we don't need to go all into like why finance is kind of scummy, but like but they have all these things. Like, you had the same thing with the GameStop stuff, like somehow, like with a lot of intervention by a lot of different players, like sort of the financial institutions got out clean-ish. Like, it was kind of weird. So there's a lot of stuff going on, but this type of stuff you cannot avoid. Like, the only thing, like in theory, like Trump could have, you know, told all of the financial institutions in the US what he's doing. Maybe. I think it's unlikely, but like maybe. And then they would have potentially like positioned in a way where it wouldn't, like, it would be like tolerable. But globally, like, that still wouldn't be the case. Like, I'm sure there's a crap ton of leverage in the global
and that
system.
still doesn't happen because it's always like, oh yeah, if this number hits this certain thing, literally everyone in the market is liquidated. So therefore QE, therefore I mean, there's circuit breakers on this market, right? Like they close the market if it goes down X% in a certain time. So it's like such
which is
market
conceptually really funny.
Yes, yeah. It's so
Like,
it's like yeah. Your dishes are falling out of the whatever, and you close the door. You know,
like it's such a different like mentality towards markets than kind of people in crypto generally have, which is like, it's almost like, we will allow you to trade within these confines, we'll keep you safe. If things get out of whack, no more trading. Like, you know,
Right.
like, it's like, what does a circuit breaker actually do? Like, it's sort of almost like the argument for circuit breakers is like, people can calm down or something.
yeah. That is
like what is
guys,
it?
just wait a second. And like in crypto, if it's like you set your slippage too high, there's some dark forest flashbot MEV dude on the other side of that trade taking out 2 cents. Like it's
Yeah, exactly. Like, but yeah, it's fascinating, and just the whole like we don't need to rehash all this stuff, but like just the whole concept that, like, you know, every Friday everyone's like, all right guys, cool, shut it down, see you on Monday. Like, what kind of a fucking market is that? Like,
the Japanese market has a lunch break. I just found this out because I was looking at how down bad Nikkei is on the thing, and there's a lunch
Twitter
break in the middle of that thing.
They have a lunch break where they shut down the market. Like, which I don't know. It's such a like boomer thing. Like, this is like the financial equivalent of like living in Italy and having, you know, siesta just not working for 3 hours in the middle of the day. It's just like, what? Because then it also, like, the problem with all these types of things is it creates opportunities for manipulation. Like, if the markets are not open on weekends, then that's a window of opportunity to do things on weekends, right? And and that's it's all super weird. But we don't need to shit too much on TradFi. It looks painful enough as it is.
I'll say a crypto point about that, which is that it's actually interesting because we're soon going to get, I think, tokenized stocks in a way on chain that's more liquid and kind of better than what has been the case so far. And I think that will be, during times of volatility, that will be like an interesting thing. It's going to be almost like the crypto creates these signals, like Polymarket is used in the news. I wonder if that's going to be actually, in the right circumstances, like kind of newsworthy in a way, or it's kind of like, okay, like it's saying this is the price.
It's like pre-market.
Exactly.
Yeah.
Already the news focuses heavily on pre-market trading, which is like what, an hour and a half or something, a couple hours before it opens. Now imagine getting an entire weekend of data of reactions to a particular item that happened in China over the weekend or something. If you're in Europe and you haven't started trading, like that's going to be really interesting.
Yeah, that creates a natural flow for these products as well. Actually, that's underrated, which is that, hey, this is if you want to trade, like here it is, man.
Yeah, and it will probably be that because of that dynamic. So there's two components that I think are interesting. I think it's quite likely that the volumes are going to be much higher than in most traditional markets. Like I don't know why exactly, but traditional market volumes are just garbage. Like from a crypto perspective, it's just like, what are you guys doing? Like this is not okay. And so when you let like crypto level volumes into stocks, I think that changes market dynamics in and of itself. But I think it also means that it's quite likely that stock prices are driven by moves in the on-chain trading rather than on like the Nasdaqs. So it kind of flips, and it ties into the weekend thing because by definition, if you have enough volume, the opening of a market on Monday, if that thing has been trading with higher volumes than you're doing anyway over the weekend, like it just prices to that, right? Immediately. And so I think it starts driving those. I don't know if this is like, but I'm a little bit skeptical about how quickly this will happen because of regulatory issues that are very tricky to solve. But we'll see. Like if there's anything the crypto market is good at is working its way around regulatory issues. One thing I like just to end, like what do you guys think all of this? Like where do you think crypto is after this? Like what happens with, like maybe it's easier to like constrain it to just Bitcoin because that is like the most sort of relevant in a macroeconomic sense.
Oof. Now, I'm gonna have to look this up, but recently there was, I'm not sure if I think it was confirmed speculation that kind of like China and Russia were settling oil payments using Bitcoin.
VanEck's report said they were using Bitcoin.
So if we do get into a sort of economic Cold War scenario, which with very clear poles of alignment and whatnot, and some people do find themselves either not being able to trust the US dollar, not being able to trust that their reserves are going to be honored, then this does create a significant interest on digital assets, and that is the biggest, most established, most censorship resistant one. So that definitely is going to give him some resilience.
Does that mean that the US then, like if that happens, which I think is quite likely, even if people like, if all the countries sort of side with the US, I think like this event will cause countries to be like, okay, we need a plan B. And that quite reasonably is Bitcoin right now. There's almost nothing else when you think about it. It's kind of crazy. They're like, what are you gonna fucking start shipping gold around the world? Like, fuck that.
USDC trying to get their gold out of Fort Knox, and it's like, hey, that would be easy if you were on this system.
Yeah. But then the question is like, does that actually mean that the US at some point, like the Bitcoin sort of very immediately then threatens the position that the US has if this all sort of works the way I described, which is a hypothesis like they get into this reassertive or like regain this sort of very dominant position, then they would probably view Bitcoin as a threat.
However, some people in the administration, a lot of them are pretty pot committed to this being a good thing. So,
and given the lack of privacy and Bitcoin being UTXO based, you could also basically track the flow of any particular coin through time. And I mean, already Chainalysis, I think, was bragging years ago that they could pretty much identify at the very least, one party for every transaction going back to the start of Bitcoin, pretty much. So, you could just put in a situation where if you trade with if you end up receiving Bitcoin payment that in any way has gone through any of this particular holders that we don't like, then we're just going to cut you out as well. So that would be one way to approach it without seeing Bitcoin itself as the enemy. Just use the traceability against kind of like using the traceability as a way to discourage people from trading with those you don't want them to trade with.
Yeah. There's a good analysis by a guy called Quinn Thompson from LeckerCap, who does podcasts with Blockworks, Forward Guidance, and he was very bearish on Bitcoin a while ago, and he just flipped very bullish, and he's like more positive on kind of like the Trump tariffs and the whole strategy there towards going against China. And I think his argument is essentially around BTC looking really good as like a real macro asset, and it's not a child asset anymore. And he kind of like reverted from 2025 is going to be a difficult year for BTC to like, okay, 2025 we accelerated a little bit because things are happening so fast, and BTC is actually on its way to all-time high here.
Yeah, well, the thing is, the price of Bitcoin correlates very closely with money supply or M2 money supply. So, like, it's very sort of dependent on Fed action. What happens? Like, I think that, like, I agree that Bitcoin is very well positioned, but in terms of like dramatic price moves, I think they will continue to be quite correlated with that. But I don't know, maybe like I would assume that also tech stocks correlate pretty closely with M2 money supply and things like that, and gold and whatever. And so
a soft CPI print is also coming tomorrow, and with like tariff stuff, you can actually, like, you just look at true inflation is at like 1.2% on there, or 1.4% on their metrics. So that gives the Fed an out to also cut rates reasonably, which is this monetary easing, which helps BTC.
Yeah. Well, but I think, like, I haven't quite thought this through, but it is interesting to think of like what are the dynamics of BTC if it genuinely becomes kind of the form of trade for a large number of governments. I think they are not the same as what they are today. Like, I think BTC still trades on kind of like largely speculative money, in a sense of like when there's more disposable income, BTC goes up, when there's less, it goes down. But if it's like regularly used as trade, I think it probably attains a stability that it hasn't had before, at least. I wonder if it makes it less interesting as an asset to speculate on the value of. It might.
Well, this is a point that already I had made a couple of years ago, that if we did end up integrating massively into the worldwide economy system, then this was just going to stabilize things and make it less interesting, and we would reach closer to stock movements and anything else, which again up 50% in a year and a half.
Or currencies, which would be even less.
But that also means in its real bull case scenario, we're up a lot from here. Like,
yeah.
Yeah.
Oh, sure.
Yeah, for sure. for sure. But I'm saying like there's so there, like if we imagine like there's some amount of money that would be buying in and moving around, there's some selling, blah blah blah, that sort of general currency market stabilizes quite quickly, and you would like it's a little bit unclear how much that would actually be in the near term. Like obviously it can grow over time and so on, but if it starts to stabilize and we start getting kind of data on what that actually is, like in terms of market size, I think the speculation goes out almost immediately, because then then we have the range. We don't need to, what, Sailor has a 13 million target, really?
I didn't dare to say that.
Sailor smokes way too much crack, is what I'll say about that.
He's pretty much getting his share of it and whatever McAfee would have been smoking. So
yeah, like Sailor is calculating like from like in my mind, his logical pattern for this calculation is basically like, wouldn't it be cool if BTC was 13 million? And then that's the number you write down.
I'll say that BTC has gone, like, if you just think about the early days of like what it looked like, the success case here is so enormous. You're like, oh yeah, the stock market, like go back 10 years and you're like, hey, the stock market is tanking. BTC isn't doing that well in that environment. We just dropped to 76. Like, what a disaster. Think about that for like 10 years ago. That's such a strong argument for this thing continuing on its life. Like it's incredible.
I agree, but just coming back to like the whole, what is enough percent return? BTC is quickly moving out of my interesting range.
Shall we close on that?
Yeah, we can end there. Thank you, everyone, for listening. See you next time.
This exceedingly optimistic economic nuclear winter call.
Indeed, by seasoned experts, both in military and economic aspects. All right. Thank you.
Okay.
Bye-bye.
Ta-ta.